in India. If you compare the amount of innovations that have arrived in fintech, we are way ahead even from the developed economies such as US, UK, which is a proud moment for all of us. But the entire fintech info was made. So we had this public sector ban since 100, 150, 200 odd years. Then we arrived at a era of private sector banking, where which was much more flexible for people to interact. Then we had NBFCs to lend to those people where private and public sector banks were not lending. And then finally, we had new banks of fintechs, which had a layer above the existing infrastructure to make it much more efficient for the people in terms of the speed and the quickness. Now, when you compare, and all of them are competing for the same segment. From the 150 crore people, they are targeting the top 5 crore, 10 crore individuals who have sufficient surplus money and are targeted potential customers. From business side, they're again targeting the top 10% of the business houses. So who has the stronger ability and the stronger cash flows. So the entire infra at the current moment is on people who can afford money and who necessarily does not need funds. And that's the saddest part of any fintech world. Now there comes a second mass who needs money, either for legal financing, who nobody lends people to fight a dispute. So they need money and they're stretched for cash, have a very strong case. Second, the companies are under insolvency, and that's where nobody lends to the company. Even the banks who are under COCs or the NBFC who are part of the COCs does not provide a single shit of money to this. And that's where we feel as an entire fintech layer over legal and insolvency market to make it a efficient system. We can't wait. Obviously, we had innovations like ARCs coming up to play, but nothing has lived up to the expectation. That's where legal and insolvency financer like us plays or builds over the entire infra and builds something which was never built in India. So yeah, the idea is again more to use tech during the entire legal and insolvency domain. What distinguishes us, we don't have any direct competitors. Obviously, we have started seeing smaller, and that usually happens in every domain. Once you have a success like a Paytm, you will see smaller payment aggregators. Once you have someone like us dominating the market, you have smaller copycats arising. But yeah, the type of modes that we have created for ourselves, the type of legal infra, the tech that we have built for ourselves is obviously anybody can replicate it, but it will take substantial amount for them to replicate. And the use of technology that we do, embedding into the entire system, it will take them at least 2.5, 3 years, that the time or the learnings that we have taken to reach to that stage. And by that time, we will be much way ahead of the entire population. We are very asset-light model, work with various family offices, funders, international, domestic, and that's where the entire channelizing of funds into such asset classes emerged from the idea. The two products that we work in, interim financing and litigation financing. Interim financing, lending, I'll cover these two in detail. Interim financing is a product. So for example, there's a business which has sufficient assets but is not able to pay to its creditors. Now, when they are not paying or able to pay to its creditors, the lenders approach the NCLT by the section 7, 9 or 10, given the fact that please liquidate the assets or find a buyer for this business and give us our money, whatever money is realized. For doing this job of selling the assets or buying a business, a RP is appointed. Appointed as an interim resolution professional, then on the first COC's meeting, appointed as a resolution professional. Now, the only job of this RP is to find, he works like an interim CO because the current management is knocked off. Now, the only job of this RP is to find buyers for this business. If not, then liquidate the assets. And government mandates a 220 or 330-day odd period to find buyers for this business. Now, to run this show of paying RP's fees, valuers, e-voting fees, fees of the advocates who are running the show, appearing, paying to the exigencies such as utility bills, workmen who are providing you the data, the finance guys, everything needs money. Business does not have money because that's the reason it's under insolvency, but it has assets. Now you might have 100 crores, 500 crores, 1,000 crores of assets under your corpus, but you don't have liquidity to pay to the employees, to the resolution professional will find. So the only potential outcome is RP bears the cost out of his own pocket, which becomes substantial burden of the RPs because his job is to run the show and not to finance it. And that's where a financier like us comes into the play. We provide financing to all such associated costs. On recovery, we have the first right to receive our money with interest. And that this right is mandated to us by law. How this interim finance structured is through different NBFCs because it's a lending product. It's a super seniority status. It's a time bound process. It's entirely asset backed. There are no haircuts. The returns are also fixed, and it's a customized given the transactions. We have done transactions less than 3 to 4 days of submitting requests to us, and that's the kind of speedness or agility a player like us can bring to the table, which an ARC or a restructuring firm would not be able to. And that's why we proudly say that we are glad to be a fintech in legal and insolvency domain. So that's briefly how an interim financing works. In terms of litigation financing, our second product. So for example, if you have a business, you have 1 crore claim, and typically to fighting such a claim, a 5 to 10 lakh corpus would go. Now, to incur this 5 to 10 corpus, you still need money because you don't have money to pursue this claim, or even if you have money, you are better channelizing this money onto your operations rather than fighting a dispute on your own, because more than monetary support, you have a mental drain pressure when you are fighting such a legal dispute in India. So what we do, say for example, in this case, a blended 25% cut, we spend 5 to 10 lakh, we take 25 lakh on recovery. Now the best part of this structuring is we work on a non-recourse analogy. Say, I will always draw an analogy to how a health insurance works. If something happens to me, I'll still figure out a way, or my family will still figure out a way to make or arrange funds for the health benefits of it. But I choose to take a health insurance because I want peace of mind. One, second, I don't want any unnecessary cumbersome. Third, I want to hedge the risk of having such sort of medical emergency or such sort of things. Now, taking it from a legal side of it, legal disputes are also inevitable to happen. Instead of providing a legal insurance, because legal insurance is typically not something very well regularized in India, what we provide is a non-recourse methodology. So for example, for fighting this 1 crore claim, we fund it on a non-recourse method. So whatever 5 to 10 lakh expense we are doing on the behalf of the litigant, we charge 25% only on recovery. If you don't incur any single penny out of it, we don't charge you anything. So that's the best part of litigation financing. You are hedging the risk, you are funding it, plus you are paying only when you recover the money. And now the best part is we don't necessarily, and going back to Vishal's question, we don't necessarily fund only lawyers' fees. Lawyers' fees is again a very small component of the entire claim value. The major cost is the court fees, the fees of the special advocate, the senior advocate if you need, the expert witnesses, arbitrators' fee, execution fees, stamp duties, any other operational expenses concerned with fighting such a dispute. We fund the entire gamut of expenses. So I beg to differ with Vishal. We are not just organizing the market. It's much, much beyond what a normal consumer would anticipate, and would love to connect offline on this. So that's the second product. We were proud in terms of the interim financing, when I was discussing, we're proud to fund a hospital specifically in the mid of a pandemic. And for the investors also, it was a very lucrative eras. The NBFCs, the family offices that would invested with us. So the next 10 seconds would show you how we revived a hospital in the mid of a pandemic. And this was an insolvency financing or an interim financing deal. And we are funding more such deals. We have funded more such deals. And a couple of them are towards the fag end of realizations and should be out in the media soon. So this 10 seconds would show you how interim financing revived a hospital. So it's a more of an impact investing while the time you are making money. So this is a proud thing for all of us also, because I mean, when you relate to something, I personally feel that when you relate to something, you should be in a situation to say 5 years down the line, yes, I have lived my 5 years by contributing something which is beneficial to the society, and that's where I always believe in working for the impact, and that's something that we entail to do at Legal Pay, because not only we are enabling justice but also reducing the impact on the machinery and impacting the entire legal and insolvency infra. In terms of market opportunity, is a humongous $28 billion opportunity that we work towards with. In terms of interim financing, it's a humongous $12 billion opportunity that it works with. In terms of interim financing, we compete with the likes of KKR, Edelweiss, and 8 capitals of the world, who have humongous money onto their table. But yeah, the single transaction for them is maybe a 150 crore or 200 crore or 70 crore deal. For us, it starts as low as 5 crore or 1 crore or 50 lakh worth deal. So we are solving the need for the entire MSME infra, which is the actual need of the economy. I was lucky to be part of the top 8 or 12 accounts that were referred by RBI. I was part of both the Bhushan Steel and Bhushan Power and Steel, and that not only gave an idea of how humongous the market is, but also the fact that the next level of entire revolution in insolvency infra will come from MSMEs and not from the giants, who will be one of such deals in the insolvency market. And that's where our operational approach is more from a scale perspective in terms of lower ticket size and the scale of the different MSMEs which are struggling for cash crunch. So that's something that I thought in the next 15 odd minutes I'll wrap it up. So happy to take any questions that you have.
I think we have two more questions in the chat box. One is from the anonymous attendee. He's according to him, what is the rate of interest charge, and do you need any security while you finance the litigation part?
So litigation funding, we don't take any security unless we have escrows in place, power of attorneys in place, assignments in place. It's not a rate of interest product, because you take success fee of the claim amount and you don't
Yes.
charge a lending rate. For interim financing, again, it's directly done through NBFC. So it's a charge that's created, or a financing or unsecured financing provided, but the charge is created by law and not necessarily a specific charge. So yeah,
Okay.
that I think should explain.
And there's one more question, that what's the process and documentation involved in taking litigation funding?
It's a very quick process. You can reach out to our team in less than 15 odd minutes. We can run our algorithm and tell you whether we are funding such case or not, of providing the all the documents. Obviously, what we have seen, that time lapse is from the litigant side to arrange such documents, but we get to know whether we are funding by way of the algorithms that we have developed in-house.
Yes.
Obviously, before communicating a decision, we also do a detailed diligence and do a false positive or a false negative analysis of it by way of detailed diligence by our legal team, in financial diligence team, and the risk and data analytics team. So 3 teams do their own jobs. Within less than a day, if you're qualified for funding, we issue a term sheet. If that fits into a thesis, and we would anticipate it should fits into a thesis, the funding contracts are executed and the funding is dispersed. So the entire process is less than 24 hours.
Okay, so you mean to say that diligence process is in a single day, both financial
Actually,
and litigation?
pre-diligence, the algorithm that we have recently developed can tell you in less than 15 odd minutes. It's just that we are replicating it with the 3 different teams: financial diligence, legal diligence, and risk and data intelligence, to
Yes.
back up or substantiate that data. But yeah, less than 24 hours, you can even get a term sheet and not just the diligence.
Okay. So once the term sheet is signed, is there any detailed document or something that is being entered
Yes,
post
funding
that?
agreement is executed. That
Okay.
takes 24 hours. So within 48 hours, the funding contracts are executed and everything is disbursed.
So don't you face any problems? Some people try to negotiate and everything, the terms of funding and
That's the only delay that happens. Uh,
yeah.
that's the reason
So
I'm saying, once the term sheet is signed, from the term sheet to funding agreement, it's less than 24 hours.
okay, so there cannot be any deviation from the term sheet, right?
Yes,
Yeah.
that's how
I
it
think
happens.
I think that's a smooth process then. Yeah. All right. So I
For
think
Interim Finance, obviously, we have detailed IRL checklist. Majority of the information is available on the IBBI. We scrape such data so as to ask for the least amount of documentation from the parties. And again, in less than 24 hours, you get a term sheet, you present it to COC, you get an approval from the COC. Once the COC is approved the transaction, the second point of view is just to fund it through the NBFC channel partners, and it's done. So entire process, we also appoint a registered valuer in between to do a registration or the valuation of the tangible assets of the property. So entire process again, including the site visits and registration provision, takes roughly around 4 odd days. So within 4
yes.
days, you can do a disbursement.
Okay. So one more question from Sibin. If I am investing today for an interim finance, my initial rate of return, that is IRR, will start immediately after investing,
Yes,
or
yes,
what's
yes,
the minimum?
yes.
What is the minimum quantum?
Minimum quantum on our platform is just rupees 10,000 rupees. So
Just 10. I think that's reasonable.
so
Yeah.
anybody who has a portfolio of 1 lakh or 2 lakh can invest 5 to 10% of the portfolio in such asset classes. You can schedule a conversation with our, just go to our website. You can schedule a conversation directly with our investments and structuring team. They will be wealth managers for you through handhold you through the entire journey. So we have 5 different teams: tech, uh, legal and risk, data analysis, financial diligence, strategy, and the last one being the investments and structuring team. So investment structuring team will guide you as an investor side.
Yes. So there's one more question from Rishabh. It's how does litigation funding impact proceedings under IBC? Does it help in reducing the timelines of the whole process?
Absolutely. So interim financing actually reduces the timeline for IBC, because once you have sufficient money on the table for the RP to run the process, the entire process is much more efficient. And that's where the hospital was also revived in less than 9 odd months of getting a finance from us. So yeah, the entire process is run efficiently. And the second part of the story is litigation financing within insolvency. An area that we specifically focus is non-readily realizable assets under 37A. So there are usually claims for a business which are valid claims. And these are valid claims against the opposite party. It's under liquidation or maybe under CRP, and you have to dispose these claims under liquidation for it to resolve the company as such. Now you have to liquidate the company, you have to sell these assets in India. Nobody else buys it. We buy such claims. So we buy non-realizable assets from the liquidators. And when you buy such assets from the liquidators, it's a prior assignment to us, and the company is dissolved easily. So it reduces the entire timeline both from IBC's perspective. So yeah, in liquidation, through litigation financing and RRAs, we reduce the timeline for liquidation process. For interim financing, we ease the process of entire CRP proceedings.
Okay. So there's one more question from an anonymous attendee. Is what way legal professionals can work with legal pay? I think people from
Absolutely.
legal fraternity wants to work with you.
We
They
have
are
Pan India
really
network.
impressed with the
We have
concept.
Pan India network. We are expanding to different cities also. There are openings on our website also. We are expanding to. We have recently expanded to, in fact, Mumbai, Bangalore, and Surat. We are expanding to Pune, Hyderabad, Chennai, Jaipur in the next quarter as well. So both from our own in-house team as well as the connections or the entire legal infra that we work, we are expanding on both sides of the table. So
Hmm.
very happy in any way we can be associated.
So there's one more question. That is, will the personal guarantee of promoters be sought before financing? I think this is a
Uh,
very good question.
Yes. So we don't take any personal guarantees unless and until we feel the opposite health of the litigant is not substantial. So if the health of the business is substantial, we don't take any personal guarantees. Even if we take checks it as a PDC, if escrows are not possible or assignment or PO is not possible. So different structuring to it.
Mhm. But
But yes,
see, there can be a situation, where the assets are sufficient, but somehow there can be a misappropriation from the end of promoters as well. So, taking into consideration the security and everything,
yeah.
uh, don't you feel that there should be a personal guarantee of promoters as well?
So we work with the best businesses, as I told you. We have
Yeah.
worked with large unicorns such as Let's Transport, India Gold, and
Yeah.
these are very reputed businesses. And
Yes.
backed by we are working with Loan Tap for the entire portfolio financing of the restructuring piece. So these are reputed organizations backed by very strong VCs and businesses. We usually don't enter unless and until it's a small MSMEs where we feel that there can be a misappropriation of the funds or they're not substantial assets to cover. But yeah, and in such a scenario, we have escrows in place. So as a fintech, we always prefer to have a much more stable process which is scalable rather than a dated practice of a PDC or a personal guarantees.
Okay. So, next question is, while the company, in case of liquidation, isn't a big competition from big business competitors, arise as for a good company, they too try to acquire the liquidating company.
We don't acquire any company. Stating again, we are not a resolution applicant. As such, might be in the future if we entail or go down the same story, this story. But at the current moment, we are just providing finance for the interim period. We just arrange insolvency financing or the interim financing. We don't
Yeah.
buy out such companies, and we are very focused in terms of what we operate on.
Hmm. Okay. So I think that's a good answer. Let's just move to the next question raised by Arjun Sharma. How can retail investors invest in litigation financing?
Just go to our platform. There is a structured KYC and PMLA guidelines that we adhere to. Just go to our platform within less than 30 seconds. You can register, go to the page, look at live opportunities, speak to our team. They're available right on the click by way of WhatsApp chat or direct scheduling of a call or email, whatever best suits you. Within less than 30 odd seconds, you'll get a response from them. You can have a detailed discussions with them, and whatever thesis suits your scenario, you can definitely directly invest into such opportunities on our platform. Obviously, at the current moment, the demand is so humongous that majority of our opportunities are funded either by the international funders or family offices. We are trying to bring more opportunities on our platform, but it takes time for us. So yeah, that can be a scenario. So keep on checking. We always notify you when such opportunities go live on our platform.
Yeah. So there is one more question from the anonymous attendee. What happens if company under IBC is not able to repay the interim finance?
So
I think the
company,
assets would be a security, right? In that case.
yes. So typically, the company is run by the resolution professional. The resolution professionals have numerous amount of strictness from both IBBI's perspective as well as perspective of, say for example, NCLT and stuff, and they are very well adhering to the fact the entire IBC interim financing is approved by creditors of committee. Even the person who submits a resolution plan gives a provision that such amount will be paid as part of insolvency cost or interim financing, which is paid out first. If the
Yeah.
company finds no buyer, the assets are liquidated. You liquidate the first asset, give the money to the interim financer. So there cannot
Mhm.
be any way, if you have substantial assets, that the company would not be able to pay the money for IBC. And that's where our data analytics team and the legal industry analyze such opportunities beforehand if there are no
All right.
substantial assets. Plus,
So
we
I
also
just
have a third party registered with the IBBI to do evaluation for us.
Mhm. So I just have a small question that it was mentioned in the presentation as well that in case there is a liquidation event, then the litigation financer would be paid in priority even to the creditors. So is this recorded somewhere or it is as per law
Yes,
or
interim
something?
financer is pari passu the cost of the resolution professional or insolvency cost. So it's
Yeah.
part of the insolvency cost, and you are paid first before paying anything to the workmen or the statutory dues or to the secured creditors or to the unsecured creditors. So in the waterfall
So
mechanism, you act first.
yeah. So interim financer and resolution professionals would be given the first priority, right?
pari passu,
Yeah.
along with all other insolvency costs. If,
Yes.
for example, a workman
Okay.
would have provided or an
So
operation writer would have provided services in meanwhile.
yeah. So I think these are the only questions that have been raised in the chat box. I think uh, next we come to next question, that what's the legal pay future plans. So are you
The
trying to
future plan is obviously there are different products that we will keep on testing, going live within legal and insolvency financing only. Uh, uh, there are some pilots that we usually keep on doing on our. So definitely the idea is going deep dive into the entire, or penetrate hard into legal and insolvency market. So that's the one area. Second, the scale throughout India. And that's where I was mentioning that we want to scale, and we are eventually scaling across 10 different cities in less than 3 months. So that's the scale that we want to achieve. And secondly, penetrate within different products within legal and insolvency market. In addition to that, there are different plans. Obviously, being a startup, you have aspirational plans to go globally for a product that you have made from India to the world. There are ideas to it, but yeah, let's see how things pan out.
Yeah. So I think there's one more question that has been raised, that are you planning to have your own NBFC?
We currently work with 10 plus NBFC partners already. Being a fintech, we always thought of having a layer over the entire domain. We would never want to acquire the entire NBFC, but if something happens as a majority of the corpus or something as giving a comfort to or having much more synergies, that can play one of the cards in future. But at the current moment, we're very happy to be a fintech, because as a fintech, you can work with hundreds of NBFCs and financial players, but an NBFC, then you're focused only on running the operations of an NBFC. So for a scale perspective, we'll always prefer to be a fintech operating as a layer over the existing infra rather than reinventing the wheel. That actually makes sense for any of the scalable startups that we have seen.
Yeah. All right. So I think there is one more question raised by Vishal. My last question was only from a common person standpoint pertaining to litigation funding bit from B2C perspective. No offense, I didn't wish to indicate to any limitations of the business as such. Further
No
that,
worries, I was
uh,
just
yeah. Further, what chunk of your litigation funding businesses comes from individuals vis-a-vis the organizational structures? Basically, cases where the ticket size is small, probably 50 lakhs.
see, I would say majority of our chunk comes from the business side of it, and that's not necessarily, it's not the fact that we have not funded cases for the individual side of the story. In fact, a couple of cases from individuals we have funded against largest unicorns in India. But the business side of the story obviously is heavy on the part, because of the fact that with a business, if I just talk of the number of cases, they have gamut of cases to give to us, while an individual will have say one or two such cases during his own lifetime, unless and until you are maybe more on litigations and bad on luck part. But yeah, typically an individual would want to avoid such disputes, and during the lifetime, he'd at least have a couple of disputes of commercial nature. Obviously, we'll have family settlements, which we don't work because these are emotional settlements. You might have a criminal side of it. We don't fund criminal disputes. Only commercial cases, civil in nature, is something that we work, which for a business definitely are much more in quantum, and that's where we, for business, it's we fund the entire portfolio for them, but for an individual these are lesser in number.
Okay.
But recently we have seen majority of the cases from businesses. Say for example, whistleblower cases we have seen. We have funded cases of non-payment of dues from some of the largest unicorns in India, specifically because of the current layoffs. And these are valid claims are not being paid off because of the funding winters, etc., etc. So we have funded such cases also, which not only give them an upper hand or a capability to fight against such massive unicorns, but also entail a justice, because the saddest part of the justice is not free. We just try and defer the amount to her, because obviously we are not a non-profit organization. But even if you have to ask for justice, you have to need to have a strong legal or law firm like India Juris. You need to have a strong funding partner like us to fund such amount. You need to have a
Mhm.
strong, say for example, the entire case merits being prepared by experienced lawyer like yourself. So it's the entire domain that needs to be framed if you are going ahead with the judiciary system. So to entail justice, there is a lot more effort and financial drain to be achieved, and that's something that we rationalize so that the burden is not on you at the moment, and whenever the cash flows or inflows arise, we take a cut from them. So that's as simple as that.
Yeah. So, Krishish, I have two questions. One is with respect to litigation with respect to litigation funding. I believe that litigation funding in civil suits is not a good
Only
option in
commercial
India
in nature
as of
where you
now.
have a dispute. Yes, only commercial at the moment. You
Yeah.
have invoice-based claim, you have a recovery dispute, you have, say, for example, non-payment of reduce of salary or whistleblower case, shareholder disputes. These are the kind of cases that we do at the moment, because
Yeah.
property dispute, the problem is it's more of an emotional dispute. And we at no point want to get into the emotional side of it, because we are a unvested, uh, just having a commercial interest to a dispute, nothing else and nothing more. Am I audible? Hello, Sanch, am I audible? I'm audible, I'm not sure.
Yes, continue, please. You're audible.
Okay, done. Yeah, so the property litigation, I think I've answered. What's the minimum ticket size of litigation funding? Entirely depends upon your claim. We have funded cases as low as requirement of 5 lakh, 10 lakh, and as high as a $500,000 or $1 million plus. So it entirely depends of your case. If your case is meritorious, don't feel free to don't feel shy to get in touch with. Please feel free to reach out to us. You can directly go to our website, schedule a conversation with our team, or just WhatsApp through the dedicated number. So anything will work. We'll try and figure out a way to get you to the end of the funding. The range of funding again depends upon your claim. We are very flexible. Even if you are smaller dispute, we are more than happy to have a conversation, because obviously they're not charging anything for it. So yeah, it's good to have a conversation. How can compare risk between a normal stock investment and mutual? See, and that's the best part of being an alternative investment. It's not linked to market fluctuation and the distress. In fact, in the distressed, where or specifically the Ukraine war, and that's all we experienced globally also.
Kashish,
Sorry.
sorry to interrupt you. There's a technical issue actually.
Okay.
You may continue. Saransh will join in a while.
Sure. So the question
Yeah.
is, how can you compare risk between a normal stock investment or a mutual fund giving the same returns with the litigation investment? So I would say the best part of having an alternative investment, such as a legal or an insolvency investment, is that it's not linked to the market. And that's the general terminology of a bond practice also. But in bonds also, the yield change. However, in an alternative investment like this, the returns are fixed or at least predictable or on the higher side of the fag. And obviously, with litigation financing, it's a high risk, high reward product. With an interim financing, you generally know a typical range within which the targeted returns would be achieved. That said, they have tested times in terms of the legal insolvency market, not just in India, but also globally. In terms of the Ukraine war, was the same period where stock market crumbled, but our healthcare product gave 26% plus returns to the investors. And that's where the beauty or analogy of this asset class comes into the play. It's not impacted by way of such adverse parameters, which might impact stock market very quickly, might impact bond market depending upon how rates change. But for a product like this, it's lesser impacted. In fact, when companies go under distress, you are able to better negotiate the prices in terms of the litigation financing cuts, and for the insolvency also, the market increases. So I'm not saying that we benefit from the uncertainty in the market, but yeah, that actually benefits the asset classes per se. Any other questions that we have?
Hey, hi, Ashish.
Yeah.
I think they're all tech. So I think we have some more questions if we have not continued with that. So there's can an individual having profit approach fund not possible, right?
So I have
That
answered.
comes
I have answered till second last question. I think last question from Kuldeep. That's
litigation.
Investment process for investor, whether through LP. Yes. So currently, at the moment, there are different structures to it. For the larger piece, so the question is whether investment process for investors, whether through an LP or an individual, we can. So as an individual, also there are structuring to it. If you are an NBFC, there is a larger, you are investing into larger capital contribution, that is also feasible. If you're a family office, that's also feasible. If you're a large family international funder, that's also feasible. So there are 4 different structuring of the process that we have. I'll suggest you to speak to our investment team, and they'll guide you the entire process in a very crisp sense. So it's very easy process. You can directly go to our website, schedule a conversation, or just WhatsApp them with your query. So they'll, I mean, you can have a further direct detailed call with the investment structuring team, or can have a conversation over even WhatsApp and chat. Yes, sir.
Yeah. So
Yep. So I think I've answered the questions that were given. Any other question? How much time will it take for the
yeah,
disbursement?
I just have I just need to ask a small question that sometimes the interim financing process, let's say the CIRP process, it takes time. Sometimes it extends beyond 1 year. I have seen in most of the cases. So, do you face any such problems, while providing interim financing? Because sometimes the interim financing
Yep.
might take place, 3 or 4 years. So how does, investor cooperate with you in that case?
So, and that's the reason I only say that the risk in terms of interim financing is the delay risk. There cannot be any default risk. The only liquidity risk
Yes.
is the only corpus where otherwise you could gotten an FD rate of 5%. The only reason why you get at 18% or 20% is because of the liquidity side of it. That it's liquidated at an unpredictable time, I would say. Obviously, for us, we enter into such deals where we anticipate what the recovery mechanisms would be and how soon the recovery will entail or analyze. And that's where the thesis that we give to the investors in 18-month period, that you anticipate an 18-month recovery or a repayment cycle, extendable by 12 months. So typically you think that your money is blocked for 18 months, extended by 12 months. A 30-month period is something that you entail. If it happens in 9 months, it's very good for you. If it happens in 6 months, it's amazing. If it happens in 12 months, it's within reasonable time. If it happens in 18 months, it's good. If it happens in 30 months, you're still getting your money with interest. So
Yeah.
risk is the delay risk.
So what if the investor wants to take an exit in between? Let's say he doesn't want to
Currently, at the moment, there
wait
is
for
no
beyond
secondary.
18.
Yes, currently at the moment there is no secondary exit because we don't keep a single money. It's deployed to the company.
Yeah.
So at the current moment, we don't give any secondary exit. We might in future, But at the current moment, and that's the reason I'm saying if you have a 2 lakh worth portfolio, invest only 5 to 10,000 of it into such asset classes so that you're not faced with liquidity crunches.
Yes, yes. Okay. So do you have any future plans, to launch any mobile application, or you already have that in
We are
existence?
already on the mobile website. We
Because
always a very asset light company, not invest too much into an app, but invest into the product
yeah.
and the functioning. And that's where we have mobile website. We have our own website that's fully responsive, works very well. Have tech plans for increasing the interface side of it, but at the current moment, focusing our energies on the operational side of it more.
Mhm.
Because I've seen
All
people
right. So,
after having an app accessing only the website.
there is no, bar on that to launch a.
Yeah, it's no bar as such. It's just that our
Yeah,
energies are
no,
correct.
but because it becomes very handy.
I
Yeah.
understand that, but what we are building the entire infra is on the fact of a community-based approach, which works very well with the embedded WhatsApp API features that we have. A flexible, responsive website that works both on desktop, tablet, and mobile version of it. And third, coupled with the 24/7 support team which is there for addressing your queries. So it's a mix of the community-based approach rather than an app-based. Because if you go to an app down the line strategy, the only area is for them to have a substantial user base on or a base of the consumers and not on focusing on solving the need of India.
Mhm. Mhm. All right. So I think Mike again asked few questions. So whether we will be invested after revival of business or exit after the complete resolution process.
So there are different structurings to it. So, for example, if it's a cash generating a business under insolvency, there are transactions where you can see a repayment or monthly repayment or entire money coming into play in 6 months. But in majority of the cases, we prefer having till the revival of uh, uh, not revival of the business, the completion of CIP process or the completion of liquidation process as the case may be. We are not at all concerned with the revival or turnaround of the business. But I'm just saying that even if
Mhm.
cash flow generating business, you can even anticipate recoveries even before the resolution process is also completed.
Okay. So Vishal has a question that because both models would entail different models of operations, one will be very operations heavy, other being risk heavy. Yeah.
My last question,
So
assuming legal fees EBITDA is 100 rupees per deal and legal pay made only one deal this quarter. Okay.
I think it's the last.
Size 9,000 of volume of 9,000 next quarter. What's your personal as well legal based corporate approach currently being formed in certain fashion due to investors' influence? Because both models will entail different models of operations. One will be very operational. See, for us, the impact is something that we are trying to create is massive. And we, in fact, never had a stance that we just funded one deal in a quarter. In fact, for us, the market is humongous. Currently, 2 lakh crore is spent annually on legal expenses in India just for meeting legal and professional charges and cost.
Mhm.
This is humongous market. I would never ever prefer investing 100 rupees in of the entire money in one deal. Not even a prudent investor would do so. The game is of the mass. The game is the game is actually creating an impact. I will never create an impact by funding just one deal, right? So obviously the mass and the MSME segment. Sorry.
All right. So I think these are the only questions. If someone else wants to ask the questions, they can raise here only, or we can allow them to open their mics and camera so they can directly interact.
Tax implication.
And if someone wants to ask question, they can raise their.
And then the last question
Sorry.
on the tax implication which is again a very strong question. If you have a larger ticket corpus, we have pass-through structures where you are taxed at your own tax structure level. However, you have smaller tickets, you are taxed at the level of the LLP or the SPV. So depends upon what ticket size you are coming up and what's the exposure rate you are taking.
So is this subject to capital gains or something? The income from it?
Yes.
Yeah. Okay. So I think these are the only questions as of now.
Okay.
Let's just conclude this webinar. Yeah. So just, by concluding here, you can, just give us, a conclusive statement and what, legal pay is trying to, further achieve and what's their objectives and everything. So, so that I think that would be sufficient enough for us to understand, the litigation funding, about the litigation funding by legal pay. So you can just briefly tell what are the future objectives and what further you are trying to achieve. Do you want to enter into some other field or something like that, or you just want to specialize
See,
within interim financing and litigation funding?
whoever has made it big has focused, and I think focus as a startup is very important. If you are focusing your energies of solving one side of the story, I think it's much beneficial than doing 10 things and not able to focus. And that's the reason our focus at the current moment is only to scale litigation and insolvency financing. Obviously, we'll test different pilots for different products for the future use that we might launch as we scale. But at the current moment, we are channelizing our energies to make it big only on legal and interim financing. But yes, we want to be ahead of the competition whenever competition arises in future, and that's where we are definitely different products, because innovation is the key for solving or crunching any market. If you're not flexible or innovative enough to solve the need of the market, I think market does not honor you or does not give you that proper piece of recommendation. We're blessed to have received the support from the market and the entire ecosystem. We continue to work towards streamlining the entire infra of the legal and insolvency market. But yeah, the current focus are these two products. But yeah, testing will always be testing different pilots in different segments within the both legal and insolvency domain.
Yeah. So I think three more people have raised the questions. I think these are the small one only. So whether legal pay required to be registered with SEBI, because you are raising investment from investors. So I think the SEBI regulation also kick in,
So
while raising such investment.
currently litigation funding, if you say, it's not regulated by any authority per se. What we abide by in terms of the fashion and by means also, it does not comes under the purview of SEBI, because when you are making an investment, you anticipate a recovery. When you're doing a litigation financing, it's doing on a non-recourse methodology. If you win, if you lose it, you don't charge anything out of it. So typically it's a case management service and it's not an investment per se. Whenever regulations arrive, we are more than happy to abide by it. But yeah, in India, regulations are post factor in nature, uh, because I mean, we would have e-meds, net meds, e-pharmacies being regulated 5 years down the line of their scaling. We have the bonds market still unregulated. Even the best of the bonds that you would invest from any of the alternative investment platform bonds, they are also not regulated. Forget about being us. So India is a post factor. Even the wallets were regulated 5 years of the scaling. So whenever that regulation arises, we'll be more than happy to abide by it. But at the current moment, there are no regulations per se, but we abide by the best practices that are followed globally, such as the litigation funder has to agree on a cut beforehand. We don't mess with the case progression. We have strong conflict checks. We follow PMLA guidelines. So all those processes are worked on a best effort basis from our end, and whenever regulations arise, we'll be actually much more compliant to it than the regulator can even make a boundary out of it.
So this question. And the next question is the authority. I think for the RBI, you may require registration, right?
So RBI, in terms of the licensing, we already work with NBFC, so it works directly with the NBFC partners. So currently, we don't give any of the insolvency financing. Our NBFC partners do, for which we have arrangements with them. So
Okay,
typically,
okay.
how we are not reinventing the wheel. We are building on the entire current financial infra.
All right. Does legal pay model seek to procure financial assistance to OPCs and unregistered companies for their litigations in the near future?
Uh, we are open to OPCs. That's not a problem. Unregistered companies, I still don't understand, because if a company is registered, it's a registered company. If it's not registered, it's a uh, either partnership or sole proprietorship. So OPCs, we are very keen to it. And even we have worked even for the LLPs. That's not a problem at all.
So would you focus on these sectors in future? Uh, I mean, the
So we don't provide.
unregistered companies.
So for us, structure, it does not matter. Even if you are an individual, have a strong case against a well-capitalized defendant, it's very well to our thesis. Should not the structure or the legal structure or the existence of the entity is not a concern to us. The concern is the merits of the case, the financial viability, and the strong data to back such claims and the precedents to it. That's it.
Yeah. But raising funds from general public required SEBI registration. I think you have answered this in a
Yes.
proper manner.
Yeah.
Yeah, that you are not directly involved in this process. You have partnership with the NBFCs.
Yep.
So only the NBFC requires to go through such registrations and approvals. And in case any litigation arises on legal pay, then whether limited partners will liable
Limited
liable
partners
also.
are liable in their liability, so it does not hamper them anyway. Even our contract says that adverse cost we don't fund.
Yeah.
So for example, if you have funded an X amount, that's the maximum loss that we'll take if you lose the litigation. We won't cover up for your adverse cost.
Yes.
And for the international transactions we do, even take a AT insurance, after the event insurance, which covers adverse cost for the global transactions. But in India, there is no concept of an AT insurance, so not feasible at the moment. So our contractual rights are protected in such a fashion that there are no adverse costs being protected to us or to our investors, because at no point we would want to get into unnecessary jurisdictions or litigations. We are just a funder. So for example, if two businesses are fighting, you and one is funded by an HDFC bank and another by an HSBC bank, you don't sue HSBC bank for providing funds to fight such litigations. You sue the company. It's as simple as that.
Yeah. Yes. I think there's one more question. It's a minimum amount of investment. I think it's 10,000 rupees.
10,000 rupees.
It's the minimum amount of investment, right?
Yep.
Yeah. So this was also answered earlier. I think this is the end of the question hours. I think let's just conclude this webinar. It was wonderful having you here
So much.
on this. So I think many of the people being a growing sector in India, and Kashish, we would like to wish you all the best for the future opportunities and everything.
Thank you.
So yeah,
glad to be associated, and looking forward to more such interactions in future. And all the best to everyone. Hope everyone is safe and sound of their health, because I think that's something that pandemic has taught us very well, to be concerned
yeah,
for health. So
absolutely.
take care, and thank you for having me.